Hey guys, welcome back. Drip Coach here with Drip and Farm for Property, where we don't trust, we verify and operate with integrity and transparency. Today, we're diving into one of the most heated debates in the financial world, Bitcoin versus gold. On the right side, you got Peter Schiff, the gold guru, and on the left, Jack Mallers, who supports Bitcoin and the CEO strike. So this clip that I'm going to play comes from the longer podcast with David Lynn, where they went back and forth, comparing and contrasting pros and cons against Bitcoin versus gold. And I'm going to just play a clip from Jack Mallers because I think he summed it up really well and makes it easy for you to pitch this to someone else. So stay tuned. All right, so we're gonna actually cut to this clip on Savvy Finance because they already have it highlighted where I want to actually start the discussion. But Jack Mallers starts off basically with an analogy comparing the financial obligations of a debtor to the current situation of the US government. And he states, just like anyone in debt, a country has two options: pay it back or default. But the US government controls its own currency, meaning it can print more dollars and essentially devalue and debase the currency, and therefore reducing the real value of the debt. So we're going to play that clip as well as his points that he focuses on about why Bitcoin is superior to gold.
Content. The catch-22 with the US government and anyone that issues their own nation state currency is they can print and debase the thing that they owe. And so we know mathematically the government can't afford its debt. And we know that the United States defaulting as the world reserve currency is not an option. And so they have to debase the currency. It's their only way out is through. They have to print. And the financial markets are saying as much, in my opinion. Interest rates have gone up. Gold is up. Bitcoin's up. Stock market's up. When interest rates were zero and we were living through COVID inflationary times, Bitcoin up, stock market up, gold up. So I think we're past the point where I honestly don't even think Jerome Powell matters as much. I think he maybe did up until, COVID, but right now it's Janet Yellen. I think we're living in some early form of fiscal dominance, and clearly there's dollar liquidity. Even though we've had the fastest rate hike ever, they've tripped up banks. You've seen gold, Bitcoin, and US stock markets all make highs within the last, few years. And so to me, Bitcoin has been the most performant asset since it's been invented in human history. If you don't want to take the early number bias, over the last decade, Bitcoin has an average annual return of around 60%. Gold has.
So I'm going to pause there because he just finished talking about a few points of importance reference to the trend. And he said, despite the rising interest rate, gold is up, Bitcoin is up, and even the stock market is up. And the question is, well, why? And it's because of fiscal dominance. Basically, when the government spending and policy overpower the central bank's control, it's kicking in. So the US is in so much debt that even aggressive rate hikes haven't slowed down the inflation. Hence why we're going to see rate cuts coming in the next couple of days, or maybe by the time you see this video, we will already have them. And they're already kind of priced in. That's why we saw Bitcoin rally already. But I think once it's official, and if it comes in more aggressive than the market priced in, then we'll see Bitcoin push up even more. So we're going to get into the part where he talks about why Bitcoin is superior, and he just finished comparing the actual history. And he said that Bitcoin delivered an average of 60% return compared to gold's inflation adjusted rate of only 2%. That right there is a strong case for Bitcoin. But we want to, of course, dig deeper to find out, is Bitcoin actually a better form of money, not just a higher performing asset?
Has an inflation adjusted return of annually around 2% over that same duration. So I think Bitcoin is better money. I think money's compete over monetary policy, and I expect Bitcoin to continue to do what it's already done. The real problem with gold is that, unfortunately, it has to centralize. The problem is that gold can't achieve transaction finality without the help of a government or a central party, meaning that when gold was operating in a local economy and you can exchange the physical coins with your direct counterpart for your butcher, your local tailor, your grocer, whoever you were exchanging with, gold was great. When the world needed to scale an economy and the velocity of money larger than your local economy, gold failed us. Gold failed us because gold is just a bare physical metal. It does not carry a monetary network. What's the gold network? The gold network are human beings. And when you're trying to transact in an economy of billions of people globally, you are reliant on central parties, banks, governments. And it was for that reason that gold failed. And it failed in a way that you can't operate a truly free market when the concentrated supply is with those that you have to trust. And so that's fundamentally what Bitcoin solved.
According to Peter,
not only can you not operate it with the people when it's fundamentally with the people you have to trust, you can't trust the people that it's with. And that's what happened when FDR moved off the gold standard and made it illegal for Americans to hold gold. And he actually made it mandatory for you to turn it in, bought it at a discount, and then priced it up. So not only he pointed out some great flaws of gold as a monetary foundational layer, but we know that governments can just seize it and control it, and you're not going to get through the airport with any stacks of gold. Just like back in the day when you had to send it by horse and carriage, you had to send multiple armed guards and make sure you didn't get robbed. So it is a great store of asset. It's just not, as he said, like a network that can be utilized globally. Like there's no way for me to get gold from here to India and then back to Taiwan and then all the way back over to Canada in the same day. Like it's just not possible. And even if you, which is Peter Schiff's argument, you tokenize gold, well, tokenizing it requires, again, some third party to be in control of the gold and that gold to be audited so that you know what they say is there is still actually there, and then issue those tokenized certificates. So that's different from Bitcoin, where the actual ledger itself is decentralized across every single person that wants to participate in it and the validators. You can't do that with gold because tokenizing any asset requires the physical location of that asset, and that still requires trust. The whole point of the blockchain is to create a trustless ledger where each person, you can operate your own Bitcoin node if you want to and have that ledger yourself. So that's definitely where gold is flawed. Now, what I put in my previous video about some of the points and principles of sound money, that's where you can kind of argue, like, does Bitcoin serve anything else outside of speculation? And then that's where Michael Saylor says it's an actual store of energy, and you being able to transport that energy across the globe. And it's actually a asset like real estate, digital real estate, you know. It's hard to wrap your head around that concept because it's a completely new kind of idea, the way that we are looking at blockchain and digital technology. But I do personally believe it is superior and will carry on into the future. Now, the place where it does flaw is that in some kind of black swan event and we lose power, electricity, and the ability to run Bitcoin nodes, if we, let's say, just go back to the dark ages, so to speak, well, then whoever has the gold will be able to still continue to transact, because if human civilization falls into the dark ages or whatever, we still will understand the value of gold and, of course, resources. So you'll still maybe go back to butchers and, you know, bread makers and all this stuff, but you have to be able to trade and barter within an economy. So in that case, I would say gold is superior. But as long as we have tech, yeah, I will stick with Bitcoin. So one other thing I wanted to point out, and I'm going into more detail in another video, is he was talking about the Fed has to turn on the printer to basically fix this debt that we're in. Like, there's no other way besides debasing currency. And this is the best indicator to know when the bull run is coming. So what you have here in black is the Bitcoin price, and down below is the M2 global money supply. And as it says, the money supply, the top 21 central banks against the price of Bitcoin, it compares its values from a year ago. And M2 by definition is the US Federal Reserve's estimate of the total money supply, including all cash people have on hand, plus all the money deposited in checking accounts, savings accounts, and other short-term saving vehicles, such as certificates of deposit. So it's all the money, basically. So this chart shows you that clearly whenever global money supply goes up, Bitcoin goes up with it. When the money supply goes down, Bitcoin goes down with it. And this one here was, where is it? Yeah, here. Yeah, this was the COVID stimulus. So you see this change in price. And then what we're coming up, which goes with this chart, is as money supply grows, then Bitcoin price increases. And once the federal interest rates are cut, you see the chart already starting to do this same thing here, and it starts to take off. This is the banana zone that Ralph was talking about. And it's always tied to this. And it's because there is no other option out of this. So once you can wrap your head around these concepts and how the Bitcoin price is a direct reflection of the the global reserve currency being the US dollar, and the Treasury and the Fed having to basically print themselves out of debt, then people who accumulate those free dollars put them into risk assets and other things like gold. So that's why those commodities and assets and Bitcoin, things of that nature, go up. So I'm gonna probably do another video more on this, but just wanted to piggyback on what Jack Mahler was saying. All right, that's all I got in this video. Smash that HBO special, help brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real-world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.